Good afternoon, and thank you for joining us today. I'm Bruce Tatters, the CEO at Red Cloud Securities. Today's webinar features Seabridge Gold, the premier gold and copper exploration development company that exists in the capital markets today. All its projects are domiciled in politically secure regions of North America, and Seabridge ranks number one in gold reserves per share and number one in gold resources per share among all North American listed gold companies. We're extremely privileged to have Rudy Franck, co-founder, chairman, and CEO, to provide a general update for the company today. In particular, hopefully get an update on how general update. I realize we can't be too specific, Rudy, but maybe we'll get a general update on how things are going with the flagship project, and maybe interest level in up some of the other projects, because at 4,000 plus gold, it's a very different world for Seabridge out there right now with regards to valuation. In addition, Jim Anthony, Seabridge co-founder and well-known macroeconomic commentator, very well known in the Red Cloud circle, is with us today to provide an outlook on the gold market and an update to investors on the macroeconomic environments that are affecting the gold market. We'll see if he does a victory lap, given the comments he made 6 months ago, and how, if anything, maybe he was too conservative, even though he was an outlier on the upside. After the formal presentations, we'll take questions live. Please send us your questions via the chat, and we'll get to as many as we can. You can type into your questions into the chat box at any time. So don't wait till the end when it's fresh in your mind, as Rudy's or Jim are in their presentation. We'll get to them following those presentations. For Seabridge Gold, there may be some forward-looking statements made on the call. I direct listeners to the cautionary note on page 2 of the corporate presentation that Rudy's providing, or on their website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only, and shouldn't be considered a solicitation to purchase or sell securities, or a recommendation to buy or sell securities. And we note that it doesn't take into account individual circumstances of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Seabridge Gold for any specific disclosures. So now I'll turn it over to Jim and Rudy to begin. I'm assuming, is Jim starting today, Rudy, or are you?
As always, Jim goes first.
Perfect. Just wanted to make sure. Please go ahead, Jim.
Yep. Thanks, Bruce. Well, my basic thesis today is that gold has re-entered the global financial system and therefore needs to be repriced. After 80 years of price manipulation and an explosion in fiat currencies and paper assets. So slide, please. So we are now have been for 80 years on a dollar standard since 1944, Bretton Woods, which is now ending. The dollar standard was advanced by the US government's strong dollar policy, another word for manipulation, and gold is returning to its role as the only real money, quote, as everything else is credit, said J.P. Morgan in 1913. Next slide, please. So what was the strong dollar policy? Well, it consisted of a number of very specific things. First, creation of the petrodollar with the Saudis, who agreed that they would only take dollars for their oil in 1974. Creation of the COMEX futures market in 1974 was a way to play the gold market, trade in gold, but never take delivery, and always end up with a dollar profit. IMF got involved and prohibited gold as a national currency in 1976 in the Jamaica Accord. The IMF limited disclosure requirements for central banks, so basically you didn't have to tell people that you loaned all the gold out. Paul Volcker took on inflation and saved the dollar in 1980 and sent gold into a 20-year spiral downward. Gold was demoted to a tier 3 asset in the first Basel Accord in 1988, and then We had the orchestrated sales of European central bank gold from 1988 to 2000, ending in the famous Brown bottom. That was Gordon Brown, the Chancellor of the Exchequer, who actually auctioned off all his gold in a manner designed to get the lowest possible price, and he succeeded in doing so. Next slide, please. So what are the consequences of the dollar standard? Well, the dollar as good as gold replaced free market gold, which doesn't have a central bank, in trade and investment. The dollar standard gave the US what the French loved to call an exorbitant privilege to spend and sanction at will. The US could finance huge trade and fiscal deficits with impunity. In fact, they used their huge trade deficit to cycle money back to look after their huge fiscal deficit. A very nice maneuver for them. Treasuries became the global standard for central bank reserves and collateral, and the US could control international trade and finance via SWIFT, which is a dollar system for linking banks, a international banking platform. Next slide, please. Consequences number two, an enormous explosion in paper assets. So we'll just take US credit market as an example. From 1971 to 2024, it went from $398 billion to $102 trillion. That's a 256 times increase, or a little, well, just about 10 times the increase in the economy that the credit was issued against. It's an enormous increase in unbacked paper. It's not backed by the economy because if you tried to convert that to goods and services, you'd be way short. M2 money supply also grew faster, about 50% faster than the GDP. So that's what you do without a gold standard. You get a massive increase in unbacked assets. Next slide, please. Third consequence of the dollar standard. People started to throw in the towel on the dollar. So the BRICS central banks are now selling treasuries to buy gold. BRICS nations are buying energy with their own currency with final settlement in gold. China and Russia have established alternatives to SWIFT, so their own platforms for interbanking between banks. Gold is now a tier one asset. Basel III changed its mind, and it's now a preferred collateral. And China is moving to a gold-backed yuan for convertibility. This one's really interesting because they're now issuing gold warrants. And for those who are historians of the financial system, back in the 19th century, there were gold-backed bills of exchange. That's how you did trade. Now they have gold-backed warrants issued by China for its trading purposes. The only difference is, of course, they're electronic now, so they're a lot easier to transfer. Next slide, please. So the value of gold must rise by multiples. Why? Because everything else has. U.S. gold reserves only cover 5% of M2 and 3% of U.S. debt. Just for reference, in 1971, when the U.S. defaulted on the gold standard, at that time, it had 25% coverage of M2 money. So, yeah, 5 times, well, maybe. A dollar backed by debt is a very low confidence dollar. And that's what it's backed by now. The Federal Reserve's balance sheet is treasuries and mortgage-backed securities. That's why central banks and foreigners no longer want to hold treasuries and other debt, U.S. debt. Foreign-owned U.S. debt is 14% backed by gold versus an historic average of 40%. That used to be required to give foreigners confidence to own your debt. And finally, US 14 trillion of available physical gold can't back global supplies of 483 trillion of paper assets in a crisis. There's just not enough. Now, there actually is $27 trillion of above ground gold, but about half of that is in jewelry, and it's not readily available, not tradable. Next slide. So back to the future. We're going to have to reprice gold to be the active asset again that it is, and the backstop to everything that matters in the financial system. Gold is once again the best protection against uncertainty. Even Morgan Stanley thinks so. Gold's price will not be set by 80 years worth of the dollar standard. You can't reference a gold price based on those 80 years when it was manipulated. You're going to have to look back in time in order to look forward into the future for the gold price. And with that, Rudy, I turn it to you.
Thanks, Jim. Just a reminder that we are focused exclusively on North America. We own 100% of 5 assets, 2 advanced stage assets, KSM in British Columbia and Courageous Lake in the Northwest Territories, and 3 earlier stage assets, including the Iskut project in British Columbia. Today, I'll provide an update on KSM, Courageous Lake, and at Iskut. When Jim and I formed Seabridge 26 years ago, hard to believe, Jim, we've been doing this for 26 years, but here we sit.
Don't remind me.
I mean, our goal was to create the industry's best leverage play to a rising gold price. Back then, gold was trading at about $260 an ounce. Jim and I believed it would go substantially higher. And we started a strategy that was focusing on optionality and leverage by growing ounces of gold in the ground faster than shares outstanding. The thought being that the more gold we can provide our shareholders on a per share basis, the better our share price should do as the gold price goes higher. At the end of last year, we had 183 million ounces of gold in all resource categories, representing about 1.8 ounces of gold in the ground per common share. That's 5 to 50 times more gold ownership per common share than the leading gold companies. And optionality and leverage, we delivered on that. If you look over time, since we started the company, the gold price is up about 1,200%. Our share price is up 10 times better, up over 12,000%. The point being that, we have that optionality in terms of ownership of ounces of gold per common share. We've continued to try and offset dilution over the years and have been successful in growing ounces in the ground faster than shares outstanding. And if the gold price is going to go higher, we have a 25-year track record of outperforming the gold price and our share price. And if Jim is right on our call on gold going forward, Seabridge is a stock that you need to own. Today, gold stocks still represent value. Even though the gold price has gone up quite a bit over the past couple of years, gold equities have not relative to the gold price. We believe as the Western investor comes back into the space, they're the ones that buy gold stocks. And now we're starting to finally see, I believe, the Western investor coming back in, where gold stocks over the past month are starting to finally catch up to the gold price. KSM. So KSM is the project we're best known for. It's a project located in an area called the Golden Triangle of Northwest British Columbia. It's in an area that actually now is fast attracting a lot of the big gold and copper companies looking for world-class projects. In and around us at KSM, we have Teck, we have Newmont. BHP has come in here recently with an early stage exploration play, as has Freeport McMoRan. We bought KSM from Placer Dome in the year 2000. We've now spent over $1 billion ourselves on KSM, advancing it to be not only one of the largest undeveloped gold project in the world, but also a project that has successfully gone through the environmental assessment process with permits in hand, and a project that is supported by the key First Nations in the region. One big change that we've seen to the project's benefit is the amount of infrastructure that's been put in place with other people's money. When we bought this project, there were no roads, there was no power, there were no ports. We now have all 3. In fact, Seabridge is now tying into the Northwest Transmission Line, which will provide 245 megawatts of hydropower, green power to the project that will be sufficient to drive this project forward in terms of low-cost energy. We continue to talk about KSM as a project. In reality, it's a district. We now have 5 deposits at KSM, which give us 12 billion tons of economic resources, containing 160 million ounces of gold, 59 billion pounds of copper, and over 900 million ounces of silver. As we went through the environmental assessment process, however, although we have 12 billion tons to play with here, right now we're permitted for 2.3 billion tons of tailings. So we've been focusing on what is the best 2.3 billion tons to mine first. When you look at it in terms of scale, it's the largest undeveloped gold project in the world, measured by reserves or resources. The interesting thing is if you ignore our gold and just look at our copper, KSM today represents the 3rd largest undeveloped copper project in the world, in a world where new projects are needed to satisfy growing demand for copper. In 2022, we did our most recent pre-feasibility study, integrating the East Mitchell deposit into the mine plan for the first time. That allowed us to show an initial mine life of 33 years, averaging over 1 million ounces of gold production a year, and a lot of copper and a lot of silver. Back then, we used a base case gold price of $1,742 an ounce and a copper price of $3.53 per pound. That study yielded a NPV of $7.9 billion. $7.9 billion after-tax NPV for this project. That's at $1,740 gold. What does it look like at $4,000 gold? It's remarkable to see how much more value has been added to this project because of higher metal prices. So the NPV jumps from 7.9 billion to nearly 30 billion. The IRR more than doubles from 16% to over 32%. The payback of this project, the builder of this mine will get their money back in about 2 years of production, and then have another 31 years. And again, that's only mining 2.3 billion tons, leaving almost 10 billion tons in the ground that can be mined later. I think the most interesting thing, though, is the capital efficiency and also the amount of cash flow this project generates out of the gate. This study was done in 2022. Obviously, the question is, okay, capital costs have probably gone up since then, right? Back then, we estimated the initial capital of 6.4 billion. What if it's higher? Well, if you look at this project back at 1740 gold, in the first 5 years of production, this project generated EBITDA of about $12 billion. At today's metal prices, that EBITDA in years 1 to 5 jumps from 12 billion to over $30 billion. So even if there's an increase, a significant increase in capital costs here, this project still generates tremendous financial returns that is not yet reflected in our share price. And I'll come to that towards the conclusions. So we continue over the years to advance the asset to get it ready for a joint venture partner. We've talked about a joint venture for many years. We believe we now are in a position to get that done, and I'll come to that in a second. One of the risks we had to remove from this project was the risk of our environmental assessments expiring in July of 2026. Fortunately, in British Columbia, there was a concept known as substantially started, that if you can get that designation, your permits are then good for the life of the project. So we went out and secured about $500 million in funding using the project itself, not equity dilution, but creating secured notes that convert into royalties at commercial production, and then started spending dollars on site construction to get that designation, building roads, building camps, building fish compensation areas, building bridges, and most importantly, tying into the power grid. The government of Canada spent over $700 million extending the Northwest Transmission Line right past the KSM project. In contractual agreements with BC Hydro, we've now secured 245 megawatts of power for KSM. You can see in this photo here, the switching station that is being built by BC Hydro. We've now committed about $160 million that we've deposited with BC Hydro that's being spent to build this switching station. We will have power to the project within a year that will allow us to advance continued activities at the project, not having to rely on diesel or gas, but being able to use green hydropower as the power source. So finding a partner, why now versus any time in the past? Well, if you look back at the past, there was questions earlier on whether we can get this project permitted. Well, we checked that box in 2014. Whether we actually can get this project through substantially started. We checked that box in 2024. And along the way, we also did other improvements to the project to make it more attractive in terms of joint venture discussions. Why do we believe the window is now finally open? Well, it's simple. If you look at the cash flows these big companies are now generating relative to where they were a few years ago, it's quite staggering. We started a formal joint venture process with RBC Capital Markets about 3 years ago. We circled around about 7 different companies in a due diligence exercise that we felt were capable of building and operating KSM in an efficient and social positive way. But back then, when we started this process, these big companies were not generating enough cash flow to satisfy other needs internally, whether it be share buybacks, paying down debt, or paying dividends. Today, it's very different. Those big companies that were generating maybe $1 billion to $2 billion of free cash flow 3 or 4 years ago are now on stage ready to produce 6 to 7 to even $8 billion of free cash flow annually over the next few years. So we now have companies that are able to stand up and talk about being able to do a project like KSM without having to thwart their dividend payments, share buybacks, or other internal needs. When we got the substantially started designation in 2024, we filtered down the process from 7 companies to 3 finalists. Those 3 finalists have now completed site visits in July and August of this year, and we are now in direct negotiations with our preferred partner. Stay tuned for an announcement at some point in time, but we're excited about where we head from here in terms of discussions we're having. Courageous Lake, the project that is unfortunately gets caught in the shadow of KSM that the market has completely ignored. A project that we acquired from Newmont and Total Energy in 2022. It sits in Northwest Territories, just south of the 2 big diamond mines, Diavik and Ikati, that are now coming to the end of their useful life. Courageous Lake on its own, we've got 11 million ounces of measured and indicated resources at at Courageous Lake at a grade better than 2 grams per ton. In 2024, we decided to go back into this project because it was not getting any recognition in the market. Also, you were starting to see the gold price starting to move. So we went back and recast this project from an earlier pre-feasibility study to an updated pre-feasibility study, shrinking the footprint of this project and improving the economics. Back then, in January of 2024, when we completed the most recent updated pre-feasibility study, showed an initial mine life of about 12 or 13 years, producing about 200,000 ounces of gold a year at an all-in cost of production of about $1,000 an ounce. That study generated an NPV of about $500 million. Great, that was at 1850 gold. At $4,000 gold, that NPV jumps from $500 million to $3 billion. $3 billion on an after-tax basis on a project that really is not getting any value to our shareholders. So how are we going to fix that? We are now in discussions with the board to actually move this project forward to a spin out to our shareholders, where we will spin this asset out into a separate public company to the benefit of our shareholders. So stay tuned on that. We have more to report on that in the coming period. Third asset I'll touch on today is Iskut, a project that we acquired in the year 2016. 2015, the gold price had gone from 1,900 a few years earlier down to 1,050. Things got cheap again. That's the type of market Jim and I like to buy things in. So we set out to look for other opportunities. One opportunity that jumped at us was a project called Iskut, which sits about 30 to 40 kilometers away from KSM. We bought this project because we believed it could be another KSM. In fact, it's starting to shape up that way. This past year, we have now identified and started to grow an area called Snip North, which we believe will be a very, very large deposit of gold and copper. We've now announced the first 6 drill holes from Iskut this year, showing significant intersections of a continuous gold and copper mineralization at grades at or better than the reserve grades we have at KSM. We've now updated that program. We've now drilled 24,000 meters at Iskut, and we will be announcing additional drill results as we go forward. The expectation here is that in Q1 of 2026, we'll be announcing a maiden resource at Iskut at Snip North that we believe will continue to allow us to talk about the idea of growing ounces in the ground faster than shares outstanding. So stay tuned. So why Seabridge? Well, if you want leverage and optionality to gold, look at our past. It should continue into the future. We're in a world today that the big gold companies or the big copper companies need new projects. Here we're sitting with the largest gold project in the world, and if you ignore the gold, the 3rd largest copper project in the world. And we have a project that's well advanced with construction underway, and a project that has been supported and continues to be supported by the key First Nations in the region. And if that's not enough, exploration. Our exploration team has found more gold over the past 15 years through drilling, more than 100 million ounces through exploration. And we're now on to another monster at Snip North. So why do I have 95% of our family's net worth in Seabridge common shares? Well, number one, I think that I agree with Jim, the gold price is going to go a lot higher. But if you look at the valuation of Seabridge today relative to metrics in the industry, our shares trading today at about $25 a share US are very cheap. RBC maintains a database of about 150 different gold exploration and development stage companies. In a recent report they put out, they calculated that the industry today is being valued at about $87 per resource ounce. If you apply that same $87 to our 183 million ounces of gold in the ground, it would equate to a Seabridge share price of about $150 per share. And again, we're trading at $25. Fine, those are ounces in the ground. Until they come out of the ground, what are they really worth? Well, let's look at the net present value calculation, which is the metric that's used by most analysts in terms of coming up with net asset values for companies. In that same study that RBC Capital Markets put together, they calculated that the industry today, the valuation of gold stocks in the market are trading at about 55% of their NPV. If you look at KSM combined with Courageous Lake today, we have over $30 billion of NAV after tax in those two assets combined at today's metal prices. So if you equated that 55% to that 30 billion, again, you come up with a valuation of $150 US per share. Do I think our share prices are going to get there? I hope so. But I do believe that based on the market we're in now, getting a deal done on KSM, that we will have the best yet to come. So as a Seabridge shareholder, I'm quite happy to hang on to my shares and look forward to where they can go. Finally, Seabridge is a tightly held company. Over 30% of the stock is held by insiders, which include Albert Friedberg and Kopernik. Over 30% of the stock held also by directors and officers combined. We are part of the GDX. Just recently, we were added to the GDX in addition to the GDXJ. And then finally, we have a short list of analysts that cover us, all of which have target prices well above what our shares are trading at today. So with that, Bruce, I think happy to entertain questions.
Terrific. There's a bunch of questions in the thing. Should we do what we normally do, or one for Jim? There's more questions directed for you, Rudy, specifically towards KSM. But as Jim always knows, I've got lots of questions for him along the way to fill in the gaps on the macro side.
I won't be offended if Rudy gets more questions. Don't worry about it.
Okay. Why don't we start with Rudy then? So Rudy, there is many questions down the side of the column here. Some of them are quick and some of them are probably lots of them to do with KSM. One of the ones is the strategic investor from the Q1 raise still in the mix among your finalists?
I'm under confidentiality.
We've not disclosed who they are.
I am under confidentiality agreements. So I can't give you that type of disclosure.
Perfect. I understand that. I'm giving you the questions as I get them here. Is there, where's the other one? Has a hearing date been established for the legal hearings associated with the tunnels around Tudor Gold?
Well, there are three challenges now formally against the tunnels. Dates have not been set yet. Pleadings still have to be filed, and then our response to those pleadings have to be filed. This is a process that can go on for many years. So there's nothing imminent there. What I will say is that, the rights and authorizations we have for our tunnels have been in place for more than 10 years. They were in place before Tudor even came into the picture, and the predecessors to Tudor were involved in the due diligence that was done, which granted us those authorizations. We've always been willing to sit down with Tudor to try and find, is there a workable solution that can work for both sides? Up to this point in time, they've been reluctant to do that for whatever reason. We're happy to do that. Our view is that the work we did on these tunnels, authorizations are valid and good standing. Every time Tudor has challenged it in the past directly to the government has come back and reconfirmed the rights that we have are still valid and in good standing.
Perfect. Thanks, Rudy. So Jim, over to you. So one of the
Yep.
questions I have for you is it seemed in the year of 2025, what really supercharged the breakout of gold, some of the Trump administration policies that were seen to disrupt the sort of economic order on the, particularly on the trade basis for the last 35 years. So the question is, if some of that settles down, will we see gold settle down? Because it sounds like in your commentary that this is a thesis, this is a train that's moving down the track, and not much is going to stop this new world order and gold's reemergence into the financial system. So can you speak to that a little bit?
Yeah, the tariffs are an immense preoccupation by American analysts, and the Trump administration is, including TDS, we all know what that means, Trump Derangement Syndrome, are a total focus. But when you step outside of America, that's not the case. Central banks around the world are divesting treasuries and buying gold because of what they see happening to the dollar, that it's lost its backing, and there's way too much of it. It's an inflationary trap. And perhaps most important, if you look at surveys by the World Gold Council of central banks, they tell you that they're very concerned about having control of their own reserves when they're in dollars. That the capacity for the US government to impose sanctions is scary to them, and they want fewer dollars. So that's what's really driving this. It's all about dollar debasement. It's about gold coming back into the system as an alternative. And it's about inflation and the fact that the dollar standard has been inflated significantly and will be more. One final thing, just to look at where the concerns are. There's a, a big concern that we're about to see more QE very soon. And why? Because bank reserves are falling to levels that are now creating stress in the US banking system. So we're going to have to see more liquidity. It's coming, and that's going to devalue the dollar further. Not to mention, we now have rate cuts proceeding from the Fed, and that's going to weaken the dollar as well. So, nope, that's nothing to do with tariffs, nothing to do with the general government policies being pursued by the U.S. administration. It's way bigger than that.
Yeah, that's what I suspected. So Rudy, back to you. I thought this was a good question off the line. How does copper factor into your core business strategy? Do you view it as primarily as a byproduct credit to lower your gold production costs, or as a distinct high value asset that can attract a major copper producer as a joint venture partner, or at least a gold producer that cares about copper, because many of them do now, particularly given the global push for critical green energy metals? So just Seabridge's overall view on copper versus gold.
Well, if you're bullish on gold, you have to be bullish on copper, just looking at the underlying supply and demand fundamentals going forward. New mines have to get built. From discovery to first production for a major copper mine in this world, it's probably 25 years. So it's not like you can turn on a switch. And as a result, the copper price will go higher. We're fortunate that the 5 deposits we have at KSM, 2 of the deposits are higher grade copper relative to gold and will produce more copper relative to gold. And 3 of the deposits are more gold centric versus copper. So this is a project that actually works for both gold and copper companies. If you look at this project, if you wanted to sequence the deposits and mine Kerr and Iron Cap first, you can actually have a project that generates more copper revenues relative to gold. What we had focused on, though, is a project that gives the quickest return of capital to the mine builder, and a project that generates the best IRR and the best net present values. And that's the mine plan we have in the pre-fees. But as metal prices will change over time, there's no question that you may look at resequencing and bring some of that higher grade copper into the mine plan sooner. And that's why when we went out to try and partner this project up, it was not just gold companies, it was also gold companies and copper companies that focused on this opportunity. So yes, we're glad we have copper. Right now in our calculations, we show it both ways. We show it as a co-product basis in terms of the costs and a byproduct basis. The bottom line is it's a ton of material generates certain revenues, whether it be gold or copper. We like gold, but we also like copper. You have to.
Thanks, Rudy. So Jim, back to you. I have another one, and this comes from, we had our recent fall mining conference, and we had a Bloomberg strategist do one of our keynotes for us. And he was citing a recent correlation between the NASDAQ and the S&P, basically the AI trade and the gold trade, simply just because they're both going up at the same time right now. And made the comment that if the AI trade ends, the gold trade will end. I thought you would find that humorous, but
My goodness.
maybe you can put some commentary on how these are very distinct and different trends.
Yeah. AI is a splendid speculative bubble. Anyone who thinks otherwise just hasn't. Oh, by the way, check out Michael Burry, the famous short specialist from 2008, who is short AI and will explain to you why it's a bubble. Because unlike the .com bubble, this one has purported earnings, but they're all based on a depreciation rate, which is wildly unrealistic. So that's a speculative bubble. Gold is a place to put your money when you don't think it's safe anywhere else. They're so diverse, so divergent, that it's really not worth discussing any further. But if you do want to speculate in something that pretends to be gold, then try Bitcoin. That'll do just fine. It also trades with NASDAQ right now, but much more effectively than gold.
Okay. So Rudy, listen, not to put your feet to the fire, but this is a good question off the thing. So Rudy, has the timeline guidance changed on the KSM JV from the end of the year 2025? Because there's only 42 days left.
I know how many days are left in the year, and one of our key objectives for this year was to get a deal done, and we're moving towards that.
Okay, that's fair. I know we can't be too specific, but clearly there's some eager people in the audience.
No one's more eager than my wife, believe me.
I was gonna say.
Yeah.
Here's another good one for you. Does Jim have a new prediction regarding the price of gold over the next year? Let's put him in the hot seat, Rudy.
Yeah, I don't know about the year. I think JP Morgan's estimation of 5,000 to 5,300 in 2026 is a pretty good one. I like it. I think we could do better than that, but there are some fundamental things that are going to have to shift. And then I think a more realistic target over 3 years would be something like $12,000. That would help to bring foreign money back into the U.S. Treasury market. And would give the kind of backing that I think that U.S. Treasuries currently lack. That's why they're being divested at the moment. There's just not enough backing for the dollar and for the Federal Reserve's balance sheet. And we're going to need, therefore, gold to go much higher.
Rudy, a courageous lake question off the line here. So is my math correct that 16 tons of ore must be mined to make 1 troy ounce of gold at Courageous Lake? Are there other metals involved in the project?
There is a byproduct silver there, though it's not substantial. So the average grade in the mine plan for Courageous Lake, I think, is 2.6 grams per ton. That's a good grade. That's a tenth of an ounce, more than about a tenth of an ounce per ton of gold. So at today's gold prices, that's worth $400, right? $300 to $400 per ton. But you're right. Mining requires to mine lots of tons to get an ounce of gold out. I think the average grade mine now globally is about 1 gram per ton. So you're basically mining 30 tons of material to get 1 ounce of gold.
Yep. I was going to say, I was going to point people to Detour or Cote Lake or some of the other low grade ones
Yeah.
that are below a gram.
Yep.
And there's probably a lot of earth moving. So Jim, just a quick question. I wanted to ask you,
Yeah.
when you said some of the banks and the banking system are seeing a little bit of stress and we're going to need QE. Is that going to be do you think that had anything to do with the pullback in gold? Because a lot of people were just said it pulled back with obviously the AI trade or the S&P 500. So the question is gold pullback just simply a technical one? It needed a correction. It was way overbought, or do you think that it's responding at all to any of these stresses in the system at this point?
It was strictly technical, way overbought. I think it got to 93 on the RSI.
RSI was over 90. Yes,
Yeah,
absolutely. We're
on
back at 45, aren't we?
the daily. Yes, it's come back very nicely. Now that was technical. If you look back over the history of gold, the corrections like this, like the one we've just been through, are absolutely standard. You can expect them. Um, we've had them before, and the performance after you get them is generally very good. So anyone who wants to take a look at that, just look at the chart. I'll be happy to send it to anyone who wants to look at past corrections.
Rudy, or excuse me, Jim, or
Hmm.
Rudy, pardon me. Um, just a question, any update on Three Aces or any of your other projects that you didn't focus on here? It was really about Courageous Lake, Iskut, and KSM.
Yeah, so we did a drill program this year at Iskut. Obviously, that was the bulk of this year's exploration dollars, and we still have a bunch of holes that get reported. Unfortunately, this time of year, assay labs really get bogged down, and assay results come back slowly. From the time you put the core into the lab, it's a couple of months sometimes before you get your assays back. But we did a small program at Three Aces to test some concepts there, and we'll be announcing the results of the Three Aces program in the not too distant future as the assays come in.
Perfect. One more for Jim here. Jim, what do you think the U.S. total debt will be in about 4 years? More of a macro than a gold question.
Right.
It's a tough one.
That's a very tough question because once if I'm correct, and we do start to see QE, there's a question as to how much the Fed balance sheet is going to grow. I think it would actually be enormous because I suspect that a number of countries around the world will hit the bid, and we'll see a very rapid growth in the Fed balance sheet. That's going to enable a much bigger increase in debt and inflation. But I think that the Trump administration is intent on bringing the rate of growth down after the next year, after 2026. I think that becomes a focus of theirs. So on that basis, I think probably over the next 4 years, you're probably going to see a total increase of maybe somewhere around $6 to $8 trillion, still growing, but on a percentage basis, not quite as much.
Back to you, Rudy. So on Courageous Lake, there's a question here asking about, is that the primary focus, the spin out? What about the concept of once KSN has a JV partner, trying to put Courageous in production yourself with the elevated, with the revalued stock price and company, rather than spinning it out?
Well, the focus on Courageous Lake is to drive value to our shareholders. And when we look at the ways to do that now, we think the spin out is the best way to do it. It's a very direct method to get the value of Courageous Lake directly into the hands of our shareholders. So that's the road we're taking. Building a mine, I think if you've known me long enough and Jim long enough,
I've known you. Yep.
One of our guiding principles from day one at Seabridge, we will never build a mine. We will sell assets at the right time. We'll partner assets up at the right time. We'll never build a mine. We will never build a mine at Courageous Lake. The spin-out company, depending on who they bring in terms of management and advancement, that's a consideration they can look into. But as Seabridge, no, we're not going to build a mine.
Perfect. I think that's covered off everything on the docket here. Is there anything else in conclusion you guys want to say for the call?
Yeah, just we had a very exciting year here in terms of advances we've made on a bunch of our projects. The best is yet to come. There's no doubt in my mind that the announcement of a major company coming in a partnership agreement at KSM will drive value very, very quickly. We're trading today at a significant discount to where we should be trading relative to peer group companies. And we think that one of the reasons is I've talked about a joint venture for many years. It hasn't happened. Therefore, there's skepticism in the marketplace. When it does happen, I believe we're going to see unlocking of value very quickly. Just to leave you with this, I'm always available to answer questions. If you have questions you'd like to bring forward to me, shoot me an email. My email address is Rudy, R-U-D-I, @seabridgegold.com. And if you shoot me an email with a question, please put your phone number in. I'd much rather return a call than just returning an email. So, Bruce, thanks again. You always do a great job on this, and Jim and I look forward to the next one.
Always a pleasure having the two of you on. Thanks once again. And I look forward to the next one. Thanks, everybody, for joining us today.